There's something going on with Bitcoin, some FUD that is going around that not many people are actually talking about. And the truth is that if you look at the price action in Bitcoin, you probably would have picked up that something is wrong. And when I say that something's wrong, if you noticed yesterday, if you looked at the price charts yesterday, the NASDAQ had a massive recovery yesterday. And if you look at Bitcoin, Bitcoin didn't move. Bitcoin is still messing around in this 200-week moving average. It's battling this. The 200-week moving average is a really key point for Bitcoin if you go all the way back. And usually when we get to the 200-week moving average, we either bounce to end the bear market or we go slightly lower like we did in the last bear market. And right now, we're fighting this 200-week moving average despite the fact that the stock markets had a massive lift. And I think that there is a reason why this is happening, which I'm going to show you in a couple of seconds. At the same time, you have Solana. Solana has now had 10 red months in a row. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We're currently, so tiny green for the first time in 10 months. It doesn't help the fact that we're going into August. August generally isn't a good month for Bitcoin, specifically in midterm years. If you look at August in totality, it's a minus 6.99 and really not one of the strongest months for Bitcoin in totality. You can see that generally what happens in the midterm years, you get a slight sideways movement in August and then usually go slightly up and then we go into November dump, and that's usually the end of the bear market. The good news is that we're almost at the end of the bear market. I can tell you that because I've been here for multiple cycles and I'm seeing all the signs happening again and again and again. We're almost at the end of the bear market. When I say almost the end of the bear market, probably sometime around October, November, this bear market basically ends. But until then, there is a little more pain. There is a little bit more pain. And if you hate crypto right now, I don't blame you. I don't blame anyone who's here and hates crypto, because no matter what you do, you just can't get prices to go up. Good news, prices don't go up. Bad news, prices go down. You see that if you look at the volumes, if you look at the data, and I've been studying other data because remember we are connected to multiple of the crypto exchanges, and we know that right now July was the worst trading month that we've had in many years. So not only do I say in recent years, but actually since 2022 November, July was the worst trading month, and you can see it in the volumes in the exchanges. The volumes in the exchanges keep going down and down and down. And so what you see is that more and more people basically hate crypto. And I don't blame you. It's not about the price. It's not about the fact that the price can't move and we can't get above the 200-week moving average. It's not even about the relative price. This is a chart of the NASDAQ versus Bitcoin. And what you can see is that since 1010, and I want to talk about this since 1010 because I think this is really relevant and I think it's about to happen all over again, right? So I think since 1010, something happened here. You can see there was a massive spike down in Bitcoin. I'm going to show you what that was. We did speak about it before, but I think it's about to happen all over again. And so I don't blame you if you hate crypto, because not only is the price not moving, but also we're not moving relative to the NASDAQ. In fact, let's look at the underperformance of Bitcoin relative to NASDAQ since 1010. We've underperformed the NASDAQ by 56%. The asset that was supposed to be the risk asset, the one that gives you all the returns, underperformed the NASDAQ by 56%. We'll talk about that in a second. The other reason is things like this, where the cold card hack is now at 1,923 Bitcoin. For those of you who haven't been following this, there was a hardware wallet which is called Coldcard, which is quite a popular hardware wallet specifically with Bitcoin OGs. It's very much a Bitcoin centric wallet, and that wallet had a flaw in its seed generator. When I say a flaw, it gave you multiple ways to create your seed. And one of the ways wasn't as secure as all the other ways. It was done with a much smaller universe of words, right? And once hackers picked it up using AI, they can basically hack it. And they have been doing exactly that. They've hacked about 1,923 Bitcoin. And the sad thing here is, and this is why I say that I don't blame you if you hate your crypto. We have been telling people for years, you should self-custody. You shouldn't put your money in the ETFs. Bitcoin is a currency that governments can't get hold of, the governments can't take control over, and you've got to take self-custody over your own currency. And if you did everything right, I mean, literally, these people did everything right, and now with a $20 subscription to Claude, someone has managed to hack the vulnerability, and so far this person or this group of people has managed to get $122 million worth of Bitcoin. The problem is that a lot of these cold card users are pretty much old users. They may not be that active on Twitter. They may not actually know that this is happening, because remember, like, if you were in Bitcoin a while ago and you haven't been here for a while, and this is happening, and you're not really active on crypto Twitter, you probably wouldn't know that this is happening. And the truth is that the problem is that this is like real stories. This is like, $1.6 million in Bitcoin drained from my account on July 29th. This is a real story. This is like a real person who was part of our movement, who was stacking sats, who put all his assets on a cold wallet, just like he was supposed to do. And that's it. I mean, he kept his keys in a safe place. And now a $20 Claude subscription worked out this vulnerability. And well, here we are. People are losing millions and millions and millions of dollars. That doesn't do crypto any favors. It doesn't do the optics of this industry that's already so fraught with scams and problems and quantum computing. It doesn't do the industry any issues. Now, the shit show that's going on here, believe it or not, is that now you've got white hackers who've also worked out, because it's been published how they do this. They've also worked out exactly what to do. And now white hackers are hacking these wallets, almost like saying white hacker experts are now hacking the wallets, moving the Bitcoin out of these wallets into other wallets, and they're calling themselves white hat experts. So now not only do you have the hacker who's doing this, but you also have white hackers. It's an absolute shit show. And it really gets you to ask, like, how should you store your crypto? One way is to store it on exchanges. I mean, the problem with storing it on exchanges. Exchanges can just not let you withdraw it, or they can get seized by authorities, and that's already a problem. The other way is to use hardware wallets, which up until now, we thought hardware wallets were like the holy grail and that they were very safe. And I guess that now we realize that even hardware wallets in the age of AI, to some extent, can and will be hacked. You can use custodians, but if you're a small user, if you don't have a couple of Bitcoin to your name, and using a third-party custodian with a multi-sig is usually quite expensive. What I recommend is that you actually do a mix of all of them. So some on exchanges, some on wallets, and I hate saying this, but the truth is that I don't know how much better you are at storing your keys than in exchanges. At least with an exchange, you can reset your password. And so I think that none of these things are doing crypto any favors, specifically at this part of the cycle where we are at a lack of interest in the market. There's a lot of FUD happening in the market. All the things that were supposed to move Bitcoin aren't moving Bitcoin anymore. I mean, specifically, I saw something that happened yesterday. We had the ISM print. The ISM is a manufacturing survey, which basically goes to all the manufacturers and says to all the manufacturers to fill in a survey. They fill in a survey based on their expectations for the economy. And usually when that survey prints above 50, or specifically above 55, that's when Bitcoin usually used to explode. Why? Because that meant that the economy was exploding. You can see it when you look at all the previous cycles. Every single time that the ISM went above 50, Bitcoin broke out. You can see over here, you have the ISM breaking above, is this 50 or 51? Bitcoin landed up breaking out. You can see that again here. Bitcoin landed up breaking out every single time that the economy turned. This time, yesterday, we had the read at 55 or 56. Actually, it was at 55.6. And we have Bitcoin pretty much dead. So it's like, there's really nothing that is moving. All the correlations are pretty much broken. Now, on the one hand, you can say, on the one hand, you can look at that. On the other hand, you can say, this is very typical of a bear market. This is very typical of a post-election year. This is not a post-election year, of a midterm election year. And as Ben Khan says, we're generally, as brutal as this feels, we're actually in exactly the same cycle as every other cycle. Generally, in the midterm years, you get all these different FUDs. The last one was actually FTX, believe it or not. I don't think that the cold card wallet saga is anything as bad as the FTX thing. But it just shows you that in these midterm years, there's a little bit of pain that basically needs to happen. I did see this long tweet from Dom from ICP, and he says, one of the concerns about Bitcoin, and something that Jim Cramer mentioned yesterday, is that he is selling his Bitcoin, believe it or not, he's selling his Bitcoin because of quantum computing risks. Okay, now tell me you're behind the curve. The quantum computing train has basically traveled, but he's come out and he had this interview with a CEO of IBM.
And at that point, I would get rather paranoid about it.
Really? 3 or 4 years?
3 or 4 years.
That's not that long.
No, that's not that long.
Oh boy. Yeah, I realize I'm waiting. Ethereum, not really, maybe even worse. So I think that people have to take this man seriously because they're doing commercial quantum.
So he has an interview with the CEO of IBM, and the guy says to him, look, the quantum computing risk is real. And then he said, well, I've got to basically sell all my Bitcoin. I think as Dom says, he says the risk is, the quantum has become like the Y2K narrative. This is not the real risk for crypto. Crypto is right now, he says here, crypto is the real problem that crypto faces is that AI is getting extremely good at finding holes in open source code running on open source, which reduces the need to trust the developer. So basically what he's saying is that the developers have all been human developers, and now you've got this AI, which is basically looking for vulnerabilities in open source human development, and when it finds it, it basically attacks it and gets the honey pot of the tokens. And that is my big thesis as to why crypto isn't running right now. We have to go through this period where AI basically tests all the protocols, drains the ones that are weak, and leaves the ones that are strong to survive, and then we can move on to a post-AI blockchain world. And that's effectively why I think, or how this cycle basically ends, right? How the cycle basically ends. I kind of think that at the end of the cycle, 2 things will happen. One is we'll get regulatory clarity around the Clarity Act. Unfortunately, I don't know if we're going to get that anytime soon. I thought, and I still think, that there is a small chance that we may get a surprise around the Clarity Act. There's a 36% chance right now that we'll get it signed into law in 2026. I think we may get a surprise here because a lot of people actually want it. The problem is that it keeps getting kicked out. It was scheduled for today, but it was not added today because the White House has not yet responded for ethics counter proposal sent by Senators 𝗕𝗬𝗕𝗓 and one of the other senators. So that's not going to happen. And a lot of crypto native people seem to be leaving the White House. Like a lot of crypto native people that fought to get the Clarity Act passed are leaving the White House. I think that we may get a surprise here. I think that whilst everyone is not expecting it, we will get a surprise. The same thing happened with the Bitcoin ETF. When we all least expected the fact that there's going to be an ETF approved, the ETF approval caught us off guard. And I think that the same thing's going to happen here. I think that everybody is going to lose hope on the Clarity Act, and then they're going to get the Clarity Act. They're going to pass the Clarity Act. And I think that's going to lead to a little catalyst to get Bitcoin running again. The second thing that I think might lift crypto is I think that Bitcoin, by the end of the cycle, will come up with some kind of roadmap for quantum computing. I think what all the market wants to know, they don't want a solution. They want to know that there is a road to a solution. And there's a lot of people that have been talking about it. BlackRock's been talking about it. Cathie Wood's been talking about it. Michael Saylor's been talking about it. And I think that once they get their ducks in a row, that will turn the cycle. But before that, I think we have another hurdle, and I want to talk about this hurdle. This is what I wanted to talk to you about early on in the show. I want to talk about a little hurdle that the last time that this thing reared its head, I believe that this thing actually caused the 10-10 collapse. If you look at the charts around 10-10, when Bitcoin actually started to decouple, what you will remember is that I broke the story on my Crypto Insider channel that the one thing that happened around 10-10 that no one was actually talking about at the time was this little announcement over here. This is an announcement from the MSCI, and I don't know if you remember, this is around 10-10. It says, this is an announcement for the MSCI Global Standard Indices extension of consultation on digital asset treasury companies. MSCI announced today an extension of its ongoing consultation with the investment community around, I don't know why it doesn't let you like really print this, but this was the announcement that basically said that they threatened to take passive companies or investment companies such as MicroStrategy out of the indices. This happened on 10-10, and we then deduced that most people didn't pick up that this caused the mass liquidations on 10-10. The reason is MSCI, which is an index company, effectively threatened to remove Bitcoin's biggest buyer from the MSCI indices. I don't know if you remember all of that. Effectively, they said they only want operating companies in the index. They don't want funds or trusts in the index. And they said that, look, MicroStrategy and multiple other DATs are actually not operating companies. They are passive companies that just hold Bitcoin, and therefore they should be removed from the indices. Now, what does that mean when you're removed from the indices? It means that because you're not included in the indices, it means that index tracking funds don't need to buy you as a matter of fact, right? So generally, if you are included in an index, whether a fund manager likes you or doesn't like you, if he's tracking the index, he has to have your company in the index. Now, right now, MicroStrategy is in multiple MSCI indices, right? What the MSCI said on 10/10 is they said, look, we believe that passive companies shouldn't be included in the indices. Okay. Then they had a whole period of consultation. I don't know if you remember, we covered this quite extensively, but they had a whole period of consultation. And during that period of consultation, a lot of people actually did the numbers to talk about how much could flow, how much MicroStrategy could flow out of the indices. And at the time we spoke about 8.8 billion. It could be like, we wanted to work out how much MicroStrategy would be left out of the indices. Now, why was this a big story? Because at the time, MicroStrategy was Bitcoin's biggest buyer. And by removing MicroStrategy from indices, you would have reduced their buying power because their share price would have been a lot lower. You would have reduced their buying power to be able to buy Bitcoin. And that was a big problem. In fact, it was such a big problem that when it happened, if you look at the price of Bitcoin, Bitcoin dropped. The price of MicroStrategy from 10/10, I mean, I'll get it for you, but it is, it's much worse than here we go. So that's the price of MicroStrategy since 10/10. Let's go here. I think that's August. Here we go. 7th of October. It's so far down 76% since then, right? So it had a massive impact. After a period of consultation, what they decided to do on the 6th of January was they announced the result of the consultation on the treatment of digital asset treasury companies. MSCI has determined at this time not to implement the proposal to exclude digital asset treasury companies from the MSCI investable indices. That was after multiple companies and Saylor wrote them a whole lot of dissents. He wrote this response and he said, strategy is not a fund, it's not a trust, it's not a holding company. We're a publicly listed trading operating company with 500 million software business. He showed them that they've got different share offerings. He says funds and trusts passively hold assets. We don't hold assets. We buy and sell. We launch stretch. We do a whole lot of things. We're not a passive vehicle or a holding vehicle. That's how he described what MicroStrategy is. And to a certain extent, I believe he was right in exactly what he's saying. Now, here's the problem. Very quietly, this discussion, which was then moved to later. So remember here, they said they got feedback, and here what all they said. I'm sorry about the way that it's laid out. It's how it comes on the asset. It says, for the time being, the current Treasury index of DAT codes identified in preliminary list will be published. Basically, for the time being, no problem. Remains unchanged. Okay, that was the time being until yesterday, because yesterday they did it again. So they previously backed away from their crypto-specific proposal to remove the digital asset treasury companies for the index, but now it's back. And the problem is, not only is it back now, but it's back now in a much more structured and much smarter, much well thought out argument to remove the digital asset treasury companies from the MSCI indices, right? So they're doing it again, except this time they've got 5 different criteria: operating asset intensity, expense intensity, cash flow screen, fair value intensity, and capital dependence. They've got these 5 steps that they want to evaluate all these treasury companies on. And with this evaluation, currently applying the steps would delete these 3. So strategy, Yellow Cake, I don't know what Yellow Cake is, and MetaPlanet. And there'll be 3 on the watch list, which is SharpLink, Central Laboratories, and Lydia Holdings. Which means that, again, they are targeting getting MicroStrategy off the MSCI indices, right? And this time, because they've got many more criteria, or the way that they've created it, is that they've created many more measurable criteria. And when I ran the model through Claude basically said, look, on all 5 out of 5, it basically fails. So MicroStrategy fails on all 5 out of 5 axes because it's a non-operating company. The expense intensity doesn't hit, the cash flow screening doesn't hit, the fair value intensity doesn't hit, the capital dependence intensity doesn't hit. So basically, what they're saying is that if this passes, then MicroStrategy will be removed from the MSCI indices. What is the timeline for this? So obtain feedback between now and in September. By mid-October, announce results, and then whatever the results are, to implement them by November 2026. What are the implications here? Well, the implications here are that about $1.5 to $2 billion worth of MicroStrategy shares would flow out of MSCI indices. So you'd get a bloodbath on MicroStrategy shares. And that's pretty much what's going on here. Now, why isn't Bitcoin crashing on this announcement? And why should you potentially be worried if you've got MicroStrategy stock, but why isn't Bitcoin crashing on this announcement? And I think the answer is around the fact that MicroStrategy is just not an important Bitcoin buyer for the future of Bitcoin. In the past, MicroStrategy was a big buyer of Bitcoin. I think today the market has basically said, look, MicroStrategy is not that important anymore. Michael Saylor has been selling Bitcoin. He's been buying STRC. He's been trying to peg STRC back to 100. He's still been a little bit unsuccessful at that task. But ultimately, the market's basically saying to, look, we appreciate that Michael Saylor's got $50 billion of Bitcoin, and he'll continue to have $50 billion of Bitcoin. We don't believe that he's going to be instrumental in driving Bitcoin into the next cycle. It's a different buyer that's driving Bitcoin into the next cycle. And therefore, we don't really, right now, this is not really a big piece of news. It's not really an exciting and big piece of news. So definitely something to look out for. Definitely something quite bad if you're an MSTR holder, because there's going to be a massive dump of MSTR shares if they're not included in these in the indices. But it doesn't really affect Bitcoin, because I don't think that Michael Saylor will then sell Bitcoin to cover the losses. So it is a big problem, but it's not a big problem like it was on 1010. The market's really basically discounted that out of the market. And so that's why the market's responding like it's responding. I do want to remind you that that was all written in our free newsletter. There's a link for you guys below to get our free newsletter. Free newsletter. Everything was written here. Everything that I've spoken about in the show is written here. The part about the Clarity Act. You can get it delivered to you every morning before the show. All you need to do is just go here, click here, Clarity Act. You can get it. You can put on 2-speed like that. There is a link. Where is the link to the newsletter? I did ask Johnny to include it. Let's see. Let's go to the top. Johnny, can we get a link to our... here, Good Morning Crypto. Yeah, just sign up here. There's a free link to the newsletter. It's over there. Also, I see that there are some other links. OKX, the OKX bonus for Europeans is still on. If you are European and you don't have an exchange account, you can still get 8% deposit bonus. Guys, this will go away really soon, because there's a land grab now for Europe, and soon the exchanges are going to stop fighting for Europe. So if you are in Europe and you still don't have an exchange account, you need to go and sign up quite quickly, because I reckon this exchange bonus is going to start coming down pretty quickly. What else is there? Let's quickly look at the bubbles. Is there anything happening in the bubbles? See, pump funds up 6%, algo's up 6%. There's really not much going on, and I don't blame you if you hate this market, because I remember when I went on vacation a few weeks ago. I went on vacation 5 weeks ago. When I went on vacation 5 weeks ago, the price of Bitcoin was 63,576. Today, we are 5 weeks later. The price of Bitcoin is 63,738. Now, I can pretend that I'm excited about the fact that Bitcoin hasn't moved, but I'm not excited about it. I'll see you again tomorrow. Until then, trade well, my friends.